Great. Thanks everyone for joining us today for our NLS Tech Talk series. We usually have this once a month and we were actually planning to have it in person, but obviously circumstances do not allow that. But wonderful to have people from not just Hong Kong, but away from Hong Kong as well join us. So thank you again for joining us for our Tech Talk this evening. Our topic today is insurance at the digital transformation tipping point. So I think this has been a topic that's been on pretty much everyone's mind, and I thought it's very appropriate for us to talk about it today. And we have some fantastic people on our panel. So without wasting any more time, we'll get our panelists to introduce themselves. So Caroline, Ian, and Manuel, do you want to share a little bit about your background and also talk to our panelists here and also our other friends who joined us about yourself? Caroline, do you want to go first?
Yeah, sure. So I'm Caroline Paulhan. I'm in charge of strategic partnerships for Euler Hermes here in Hong Kong. So Euler Hermes is the world's leading trade credit insurer. We're part of the Allianz Group. And before that, I was the regional head of digital transformation for Euler.
Great. Thanks, Caroline. Ian, Manuel? Ian, do you want to go?
Sure.
Yep.
So I'm the strategy director for ZA Insure. So ZA Insure recently is a recently launched virtual insurance in Hong Kong. I believe we're the fourth one that received the virtual insurance license. Prior to this specific role in terms of helping acquire the license and getting up and running, I was with our ZA International organization. So for those that don't know, ZhongAn PNC Online is the first China online-only insurance company. It's listed in the Hong Kong Exchange. They spun off a technology business that basically runs the primary R&D and building and evolving the technology stack that leverages that business leverages. And what we have in Hong Kong is what we call ZhongAn Technologies International, which is the spinoff of that technology organization. And so our primary business based out of Hong Kong, which I was an early journeyer of, is to export a lot of that technology internationally. Along those lines, so I was strategy director at this group level in the early days. And then as part of kind of the recent, upon opening this business in Hong Kong, there were opportunities for the virtual bank and the virtual insurance. So we're also known to have launched ZA Bank earlier this year as the first virtual bank in Hong Kong. So besides helping these two businesses, I also help our fintech business, which we've also done quite a lot of activity in, but we'll discuss kind of the details, or at least that's the related topic along the lines.
Wonderful. Thanks, Ian, so much for joining us. Manuel?
Sure. So my name is Manuel San Miguel. I am a co-founder and CEO of Ignatica, and we are an Insurtech startup based here in Hong Kong. Prior to that, I was actually the CTO for Manulife Financial for Asia Pacific for a number of years, looking at their efforts on strategy, digital transformation, architecture, and how to really position technology to achieve the business objectives around growth and evolution of their insurance platform. Now at Ignatica, we've taken a lot of that core work and really focused on a specific aspect of the insurance value chain, especially the core operations and core management of the products and policies, and how that can be an engine from the inside out to really power the digital transformation experiences.
Great, excellent, Manuel. Thanks so much again for joining us and making yourself available for our discussion. So I'm Joel Azariah. I work with NL Search. We are a boutique tech-focused recruitment agency, headquartered out of Hong Kong, but also having operations in Singapore. And we have a development team that sits out of Vietnam that also supports our clients when they're looking to develop web, mobile applications also. So yeah, just coming back to our topic again, thanks for joining us. So our topic today is, has insurance reached the digital transformation tipping point? And I'll probably throw the first question out there, but in the meanwhile, while I'm asking these questions, if anyone has any questions, don't hesitate to use the chat function and type your question towards the admin. So you send the question to the admin, and then we'll ask the question for you. So yeah, we want to make it as interactive as possible. So don't hesitate to ask any questions you might have. So my first question really is, digital transformation is a term that's thrown out there a lot. So I'd love to hear from our panelists, what their interpretation is. What is digital transformation, and why is it important for the insurance industry at this point in time? So who wants to go first? Caroline, Ian, Manuel, anyone?
Ladies first, definitely.
Thank you. So I would say my definition of digital transformation is to move out from the pen and paper model that the insurance industry has been working on for such a long time. But what's really interesting about digital transformation is that for me, it's really about putting the customer back at the heart of all the insurance processes. And I believe that in the past, the insurance industry has sometimes defined the way it was doing its business in terms of what we could do, rather than in terms of what actually delivered value to the customer. So for me, the use of all the digital tools that we have today is really about delivering that value. The second thing I would say that is really important is that by design, we're meant to be a data-driven industry, right? Our job is to predict risks, or try to predict when the risks are going to materialize. In the era where we are right now, where we have access to a lot more data, all of a sudden, the job of the insurers and the job of the underwriters is really massively changing. So I would really, for me, digital transformation, I would say really centers around those two elements. Ian, Manuel?
I could certainly add. So I think our organization is rather unique because we're both like a carrier and a primary digital platform provider. And the business model that we run off is quite different in terms of how other kind of insurers have gone to market. That said, digital transformation obviously comes in two lenses. The one that I typically view, one is the transforming digitally the insurance business itself. And then the other side, actually the consumer, the customer, and how they interact with insurance. In terms of the birth of how Joanne sees insurance, it was really embedded inside like what today we call like these digital ecosystem platforms or these type of things. So basically our business kind of core business vision of the future of insurance customers, and this is digital transformation of customers at the end of the day for the insurance industry, is how users or people are interacting with the world more and more via a digital interface. And those interfaces are not going to be owned by insurance companies, just as a fact. It's going to be owned by consumer interactions and value creation via, more retail type of interactions, like by the Amazons of the world and Ubers and so on. And so I think it's the previous world of where insurance needs to be sold by people generally, and in terms of providing advice and education and these type of illustrations. There's a world where we see coming where these interactions are becoming less and less relevant because people are spending their time on digital interfaces doing other things. And so how do you meet that customer in that ecosystem? And that's the core business that we see in terms of helping insurance companies, or being the insurance company, interfacing with digital platforms that actually directly interface with customers. And then how do we kind of figure out the appropriate insurance product, which is now not the traditional type of whole size, I guess what we call non-micro products, but then we call normal products. So like just like this type of lens in terms of reshaping how insurance is delivered to a consumer at the end point.
Excellent.
Yeah.
So Ian, you're firmly of the belief that insurance is already way past the tipping point as far as digital transformation is concerned.
Yeah, well, tipping point is a very strong word, but I think we've ridden and monopolized the success of this new kind of trend that's happened, and that's because we built the business model around this vision.
Yeah.
Great, fantastic, Manuel.
Yeah, I mean, I really agree with Ian's point, and in fact, the Caroline's perspective around putting the customer first. When you look at the efforts so far on digital transformation from most of the insurers, the focus predictably has been in distribution, has really been around how do you take friction out of the buying and selling of insurance, but what you're really doing is try to just round the corners on the existing process. And at the end of the day, people are still delivering the same core products and services primarily in the same way. Instead of filling out forms of paper, maybe now you're using a nice shiny iPad. Instead of asking you 25 questions, maybe our actuaries have a little bit more data that can filter down and ask 3. But at the end of the day, the base interaction is really unchanged. And when you look at it from the point of view of the, what happens after distribution and the next step in the value chain, the business processes, the platforms, the servicing, what our customers actually get for their money. You say you sell peace of mind, but peace of mind lasts around 45 minutes. So after that, what they get is every single interaction with your product, your service, and your organization. And that part is by and large still sitting in the same kind of assembly line business processes that they have for the last 50 years. And I think to Ian's point, this concept of people putting up with it because it's kind of a necessary evil in a way, and people just basically being willing to be drawn into the insurance platform is now really shifting. We're a point where people expect those services to be embedded in the ecosystem and the experiences where they already are at. So, and that will shift not only distribution, but it significantly needs to shift the way servicing and operations happen. And I think insurers need to truly digitally transform. It's not just transforming digitally the consumer experience or the distribution experience, but really understand how the operation and how the organization for the insurer from the inside out actually transforms to support that at scale without those friction points, being able to remove the massive amount of costs that they have built into the existing operations and infrastructure and release that to be able to do better servicing, better client acquisition, better segmentations, how to become market maker in more specific risk pools that they now can understand, but with the existing processes, they simply can't afford to service. And I think that's where really, when digital transformation is going to hit really deep at the core of the organization, is when people start seeing that it needs to move beyond just the outer layers of distribution and really hit at the core of how you design, deliver, and frankly, manage the core business.
Great, thanks, Manuel. So just, I think you made one interesting point about that you're seeing a lot of organizations as far as digital transformation is concerned, it's mainly focused on distribution. So my next question would be, to throw it out there to Caroline and Ian as well, what do you see as, what are insurers doing well? And maybe what are the areas that they can improve on as far as digital transformation is concerned? Because like you said, I think maybe because a lot of the traditional insurers have invested so much on building their distribution capabilities from a agency, bank assurance, etc. They're more focused on seeing what can I get in return for that versus saying, okay, let me try something completely new, which might be new for them, but maybe for Jungan, it might be something that's completely normal. So I'd love to hear your view on that, Manuel, and then of course Ian and Caroline as well.
Well, in terms of what organizations have done well, I think folks that have actually moved the needle on certainly their consumer experiences, they've started with the right priority. They're saying, what are the key friction points of our clients, whether it is on onboarding or on another key process, obviously around claims, and have started to effectively remove the friction in those two areas. So there's a number of folks that have simplified the buying experience significantly, have removed a lot of the paper, they've removed a lot of the duplicate entry of information. They've done a lot of things to try and make it less painful for clients, and frankly, simplified the way products are explained, especially for the non-micro products, the ones that have a little bit of a longer tail and a longer impact on clients. There's been a lot of good progress made in simplifying that. And I guess also at least in claim submission, if not necessarily in claim processing and actually payments, but at least removing some of that has been, I think, a pretty predictable, but also recognizable early success. And I think things just need to start moving in from that outside layer.
Great, thanks, Manuel. Caroline, Ian?
Yeah, I would say that also the industry has done a lot of progress in terms of detection of frauds. What we've seen in particular in credit insurance in the past is that we tend to see a number of suspicious cases. And the issue is that until you can put in place, proper digital process to actually efficiently treat the very large amount of information and data that we're collecting, unless you have that, your claims team will spend an awful lot of time just trying to separate, the 80% of legit claims from the 20% of suspicious cases. And when I say 80-20, it's really just the Pareto. It's not a very scientific number about what's going on in the industry. But definitely what I've seen in other branches of industry with what, for instance, Shift Technology is doing in terms of identifying suspicious cases in the motor insurance industry, notably in Singapore, and the health insurance industry, that is really helping because the amount of investigation that you have to do on claim cases otherwise is really poorly perceived by the customers. And the vast majority of the customers are totally honest. And when you start telling them, oh, we have to look into what you submitted, because perhaps, you're not really, it's not really reflecting what really happened, etc. It's not a good moment in the customer experience, right? So anything that where we can leverage data to actually improve that process makes a massive difference for the end customers.
Great. Ian?
Yeah, I think those are I completely agree. I think there's a lot of interesting plays that are the more successful ones being these kind of like functional enhancements along the operation. So whether it's on sales side or ops side, and even like agent servicing, like having these chatbots that go straight back to the agent so that they can get quick answers for things. I think there's a lot of interesting and easy to solve and kind of low-hanging fruit where you apply machine learning or robotic process automation, where these things have generated a lot of immediate value. And those were easy business cases to kind of execute on. And so I think those are certainly the right things that have happened in the industry. I think what the industry is struggling with, and you can see these kind of like digital garages that like get set up, or these like
Innovation labs.
Yeah, innovation labs, or these corporate VCs, and they're all, there's been a couple of years of hype and kind of like upward trend in terms of investments into these like really more radical plays, but then couldn't find their way back to the core business. And then this is kind of like the general industry challenge, right? And this goes back to prior to my Johan experience with like AIA. It was very straightforwardly, like if I can spend like $10 million to increase like 2 percentage points of efficiency out of my agency force, I generate X amount of value. And then if I invested this money to try to create this like brand new digital unit that's quite sexy with blockchain and all these things, like how much value do I get? And then there's this kind of like very big question mark as to like, where's that critical turning point when digital, or like customers interfacing with digital, how does that completely change the game? And I think today, like something like COVID, right, had occurred, and then everyone is like utterly realizing that like, oh wait, I'm really not that digital. And so, and so then, but rightfully so, like the regulator had, opened up some avenues to kind of still enable business, and rightfully so. And a lot of these things have occurred since then. But then there's these kind of balances that these large organizations that have a lot of existing business that's very profitable.
Sure.
They're just kind of like figuring out like, when do I make these plays? How do I make these plays like appropriately so without upsetting my core business that's doing perfectly fine? So there's a lot of these kind of like, I mean, now it's not always perfectly fine, but before, when they thought it was always perfectly fine, there was not the same amount of urgency. So,
Great, thanks, Ian. Just to build on that, I think there's a question from the audience where, just to build on what you were saying, Ian, about, is digital transformation going to make agents or the agency force redundant in a way that, they completely transform the experience and go direct to customer, or you think that's some time away?
Oh, I think it's quite far away. I think there are certain products that consumers still value a lot, like these like investment linked products, or these kind of more wealth management oriented products, or these tied like CI/investment products. Like these are all like products that are kind of necessary, or just there's some sort of like financial education crossing over this like what is true protection issue. and what is appropriate wealth management mechanisms and all these things. So I think for today, in terms of what financial products exist out there, there will always be this space in the short to medium term for agents to play. I think what will happen with more and more technology, though, is like, for example, today, agents really value the opportunity to engage the claims experience.
Yes.
And like they try to take advantage of all these other engagement excuses to kind of like come back to the customer. And I feel like these type of engagements are kind of not as valuable as it could be if it was more digitized, or if it was like a service offering direct from the insurance provider, and so on and so forth. So I think the way the agent role plays out should probably drastically shift and change and be more efficient.
Caroline, Manuel, anything you'd like to add on this question?
Yeah, I mean, I would say that a lot of insurance products, and especially when we look at highly customized products, they will remain complex enough that the end customer will, still need a form of guidance, a form of advice, etc., from a broker, from an agent, etc. But I think that more and more we will have a market that will be clearly divided between highly customized products that fill extremely specific needs, and those are the ones that will need a form of hand-holding, perhaps.
Sure.
But also on the side, a lot of much simpler products that the end users are perfectly able to buy by themselves. If I look at what's going on the French insurance market, for instance, there is now a very big segment of the home insurance market that is actually taken by digital products. Because they have been able to come up with policies that I can understand, a 5-year-old can understand, anyone can understand. So all of a sudden, if you have a short policy, and when you read it, you actually understand what's covered and not covered, then probably in that case, you need less of an agent. So I think in the B2C market, perhaps that will happen. The B2B market, I believe, will remain in need of advice and guidance.
Manuel?
Yeah, I think Caroline just hit something really interesting. I think when you look at especially the complex financial products, that for years and years, the insurers have basically been trying to differentiate through complexity and through increasingly obscure feature sets in the product. So what happens is now you need a lot of explaining to be able to get there. As those products themselves, and that also, it creates additional challenges around compliance, and it creates actually additional costs just to keep that whole wheel turning. As there is increasing pressure for those products to be simplified, at least in the way that they're being presented, the role of the financial advice of the agent, I think, is going to change. The other aspect actually goes back to Ian's point, which is part of the reason why some of the operational processes, there's a little bit of internal dialogue, let's say, within the organizations around how to fix them, is because they don't want to take away the opportunity for the agent to go and present the paper forms and be helpful around this horrible process, because it gives them an opportunity to engage with a client where before it was a fire and forget product, and gives them an opportunity to perhaps identify another need to service, to cross-sell, or at least to build the relationship. When you add to that the compensation models that are built into the product and the incredible cost that drives across the whole organization, it makes a very difficult pyramid to topple over. So I think until and unless the compensation structures, there is enough pressure, whether it is external or from an external market for regulatory or what have you, to shift how that works and forces now some of the agency force to work a little bit differently and products become more simplified, it's going to be very difficult to really see that whole agency model significantly transfer, at least for certain product classes.
Understood. And so, we have a very interesting question from the audience. As companies are going through this digital transformation, how important is it for them to be, first to market? And do you think this anyway poses like challenge to the existing regulatory environment? I'm sure, Ian, you're in a lot of ways, first to market, and you've probably had some interactions with the regulator. So maybe you want to share a little bit about your experience, at least what you can share.
Yeah, working with the regulator, well, the problem is when you go to, the first to go to market with a lot of these kind of, I guess, digital concepts, or different approaches to go to market has really kind of, I don't want to say challenged, but then has really required the regulator to think of why they regulate a certain way. Again, like to kind of like, okay, so I'm trying to control for this, or I'm trying to protect the consumer from that. And then like reshape, okay, well, if I'm in a digital context, does it apply the same way? Or where are the areas of abuse? And then they have to kind of go through this blue ocean of like new thinking that they're not comfortable with, and have to learn how to think in this new space. And so being first to market, obviously we've spent a lot of time kind of like having that conversation over and over again of why this digital aspect is okay, or you know, you have been taking on a certain risk and you didn't know it via the agency channel, that sort of thing. And then there was a bit of this kind of active dialogue. So it's always, you always end up at, and I think we always feel it every day, is that we feel like we're investing a lot more than maybe the second player that will come around, and then having to you know, deal with the education again. And so, but then there, it is worthwhile. So for the bank side, for example, obviously we've created a lot of noise. I think we set the trend. We've had, I mean, for good and for bad, like obviously there's some good PR and bad PR too. But then we are still driving a lot of uptake, that surprisingly so for even ourselves. And so there is that advantage in terms of first to market. We'll see if it's worthwhile to be first in a couple months as more of these features come out. But then I think it has definitely helped, because we are uniquely both VB and virtual insurance, that it has obviously helped our virtual insurance relative to how the other virtual insurers have been playing out since. Because we had the bank lead the brand, we're a ZA group in Hong Kong, and we go to market kind of like branded together. And so then this has already helped without even a super intimate like proposition tie-up at this point.
Thanks, Ian. Caroline, Manuel?
My experience is kind of interesting. So obviously I was on the buy side for some time, and now from the startup perspective, engaging with the organizations differently. Everybody wants to be near the front. No one wants to be first. Perhaps, yeah.
Exactly.
That's the best way to put it. So there is a lot, I mean, other than, again, relatively, and not to diminish the value of them, but relatively superficial changes that we've already discussed around the value chain, to really hit things like using data differently to define some of the risk and risk pools, using data differently around fraud detection and claims processing, using, again, digital architectures to change the way operations are run and how you do things like, you know, administration and accounting forms and things like that. Everyone very readily recognizes that it is a massive problem that they want and they need to solve. The cost of operations, the cost of their in-force book is taking resources away from being able to take on new opportunities. The slope of the cost of growth chart is really not sustainable in a lot of segments. But at the same time, folks are very, very nervous around actually taking that first step, engaging with regulators when in cases that they need to do that, and in some cases figuring out how disruptive this would be to the ongoing businesses, that they might be a little bit more expensive than they want, they might be slower than they want, but they're there, they're stable, and they're profitable. So finding that balance from an appetite perspective internally within the organizations is actually a little bit of a hurdle. Once there's enough kind of organizational will behind it, I think the conversations with the regulators is a bit of a dialogue, but I would think that the appetite is definitely there.
Caroline?
Yeah, I'm not going to say that it's not important to be first, because Euler Hermes has always been the most innovative credit insurer. I mean, trade credit insurance is a relatively small niche in insurance, and there are three, big credit insurers. But Euler has really been leading the pace. So I'm not going to say that it's not important for us. What is true though is that when you come first, there is always a risk of the free rider paradox, right? Which is that you're going to be the one investing in trying to understand how to regulate the legal framework and what are you authorized to do, and going to talk to the regulator. And once you've done all that, then, the competitors can pretty much just, follow what you've done. The other thing is that yes, it's important to be first, because I mean it's also important in terms of PR, in terms of motivating the teams, in terms of showing that digital transformation really is occurring, keeping everyone on board, etc. I think we should not overestimate the fact that consumers themselves may not all be ready to move to a full digital experience, right? Perhaps 10 to 20% of them would be very happy to move to something that's very digital, automated, online, you name it. But then you will have the 80 other percent that will be more cautious and will think, I'm going to let the others go first, see how that goes for them, then I will make up my mind, etc. So it's not a winner takes all type of situation, I would say. But also you have to consider that innovation is not only about the pure return on investment or the short-term extra business that you make. It's also about your branding, your employer brand as well, the types of talents that you can attract, the motivation that you provide to your teams, etc. And being the first to innovate on a specific topic also gives you all that.
Thank you, Caroline. So you made one very interesting point, Caroline, where you said, customers may not be ready to move completely to digital yet. Do you think COVID has changed that and accelerated the move to digital? And which companies do you think are best positioned to take advantage of this accelerated move, if it is indeed that? Is it the Insurtech, well-funded Insurtech? Is it the digital insurer, or even the traditional insurer that's moving towards digital transformation to reach that customer that is looking for a digital experience versus meeting somebody in person?
So I would say that for me, this is really something that can benefit everyone in the industry. I mean, of course, the Insurtechs are probably better set up to benefit from that in the very short term. But the interesting bit is that it's shown the entire industry that there is an appetite from customers to move to something that's more digital. What we will have to see is whether that change is going to be sustained over time, or, if, and that's a big if the whole thing is behind us at one point, will the people go back to, wanting to go to a branch or a shop and meet with someone and have a relationship, etc., or are we going to see a more sustained change in behavior? And obviously, I do not have the answer to that question.
Ian, Manuel?
I guess it really goes back down to what is the product and service proposition at hand. I think that certainly there's going to be a lot more impetus now for people who before were not really that comfortable and they would just rather have someone come here and hand me the paperwork and explain it to me, and who in fact want and like that personal servicing kind of touch. They're now probably becoming a little bit more open to the idea of not having it and still seeing the same level of services. More and more, I think you'll see products that needed that, or at least were sold in that way or serviced in that way, as they start being embedded anyway into third-party ecosystem platforms. That becomes kind of moot. So as more and more of that trend happens, I think that appetite for, again, digital-only interactions becomes a little bit more kind of par for the course.
Thanks, Manuel. Ian?
Yeah, I think I completely agree. I think it goes back to what Manuel pointed out about just like product classes at the end of the day. I think there are some that are just super appropriate to be online immediately and having pure digital interactions and so on. And some people, prior behaviorally were kind of reluctant to do so, but now have gotten comfortable due to this situation. And I think there was and then like specifically with like VHIS and the QDAP product, right? So this was kind of like a forceful move or a forceful door opening, because obviously there's like a need and there's a context, and then open the eyes of IA to kind of like relax some rules, and then realizing that like, hey, maybe there is such a thing as like a non-human KYC experience for insurance, right? And then like once you kind of have like these kind of basic steps, like kind of walking along, I feel like people will get more and more comfortable along this direction. But yeah, it goes back to like some products are just not appropriate to be pure online due to the context and the nature of the product. But then I think like there's still behavior. This has shifted human behaviors to just do like online purchasing and e-commerce in general will just rise up, and I think there's some permanence in that. Hong Kong, strangely enough for me, has not always been a huge e-commerce market. I'm sure it has now become a relatively much higher consumption of e-commerce in general. And so, yeah, I'm sure a lot of that is to stay. I'm sure people will still, like, there's a permanent uptick of using Deliveroo and Uber Eats and Foodpanda, right? And so I think similarly, that consumer level of digital transformation is relatively permanent at a good percentage, I think.
Yeah. And
Great.
if I can add
one
more thing, Joel, I think also the nature of the interactions will change that experience. There's a difference between that initial trust and relationship around buying the insurance and wanting to do that to a certain extent face-to-face. But then now the servicing aspects, I think there's going to be a far greater pressure and need and expectation around digital self-service. People are already very comfortable with, e-banking, with, e-commerce platforms, making fairly complex transactions, even, investment trading platforms have been online forever and a day. To have to print out a form, fill it out on paper, stamp it, find a fax machine, fax it into a mailroom in order to change the allocations under your MPF is frankly ridiculous. So those kinds of things are I think there's going to be a lot of pressure to change that side of the user experience, not just the buying journey.
Good point, Manuel. So what do you think is holding or has held companies back so far? I mean, obviously we have a situation right now which is really unique where customers are preferring to actually transact online or interact online, and some companies have found themselves not ready for this, and they're kind of scrambling. So what do you think has kind of held them back, and what can they do better to achieve this going forward so that at least they take a futuristic view of it rather than being reactive to these type of situations?
I think, and again, at the risk of speaking a little bit to kind of generalization, a lot of organizations focus their efforts on their agility and focus their efforts on, again, the digital transformation on the buying journey. And they really left the kind of the back middle office, the servicing, contact centers, et cetera, as a little bit of an expense line support function, not seen as a driving profit center from the point of view of the value of the customer experience. So all of the processes, the staffing, the infrastructure, the technology that runs everything south of, I just gave you an electronic signature, is still running on technology that hasn't changed in 50 years. So, and the pace and the challenge of changing that is immense. So until those kind of shifts are being able to be done gracefully, people are now kind of struggling to allow that scale. If you were now able to say, hey, I can do all these transactions directly from my mobile phone, you now have all of your consumers hitting your core banking system, which was, say, designed to handle the 300 back office operating staff hitting it before the night batch, right? Now you have 500,000 consumers hitting it on a daily basis. It was just not conceived for that scale. So I think that's where organizations like Ian's, for example, who basically built from the beginning for that mass consumer scale, have a massive leg up on what I'm going to just call the incumbents, for lack of a better term.
Caroline, Ian, do you want to add anything?
The only thing I would have said, because your question was what really has changed, I would say that what has changed is the urgency. I think before, a lot of the, retiring the legacy systems types of efforts was seen as nice to have, and everyone was like, yeah, we will do that when we have the time, when we have the right technology, when we have a budget, etc. But if it's 2 years from now, 5 years from now, then fine. All of a sudden, this is almost becoming a license to operate. So it's a massive change in the way the industry sees itself, in the way we have to define our priorities. It's also a massive opportunity when it comes to digital transformation, clearly, because all of a sudden this is not nice to have. This is like the foundation for, just to keep selling the products that we have.
Ian?
Yeah, I mean, I don't know that.
Oh,
But it was just,
I think Ian's audio is not very clear.
yeah.
sorry.
No, can't hear you.
No.
Okay, so that's okay, Ian. So I'll just move on to another question because we get a lot of questions from the audience. So keep the questions coming. Thanks for the participation. So we spoke about distribution. We spoke about servicing, product, which is at the heart of reaching out to the customer and kind of making it easier for them to buy insurance. Have you seen any successful digital product strategies to attract the consumer towards insurance? Because insurance obviously is a push product, and making it easier to buy insurance is one of the key ways to actually help customers to buy insurance online. So have you seen any strategies or where the product has been developed really well for the digital platform?
Yeah, so on our end at Euler Hermes, our big strategy is to API-ify our products. So basically, I mean, really drawing on what Ian said earlier, because everyone now is interacting digitally with their environment. Previously, there was a big disconnect, right? Because credit insurance is about exporters, usually that sell on payment terms, and they're afraid that they're not going to be paid when their payment terms expire. So basically, it's at the time when you're agreeing with your payment terms with your customer that you may start to think, oh, wait, that guy actually may end up not paying me, and what's going to happen to my business in that case? But then for you to buy credit insurance, you had to know that the product existed, contact someone, meet with them, give them information, they would return back a quote, we did the underwriting, etc. So there was a big disconnect between the feeling that a risk arises at a given point in time, but the time where you can actually buy that insurance product is much, much later. So by turning our products into API, we're now able to embed them into the normal selling process of the exporter, which means that then it becomes a proper push product, right? Because we're able to actually tell the exporter at the time when he's selling, oh, wait, have you thought of the fact that perhaps you're not going to get paid? Do you want to insure that? By the way, we can give you a price in real time because we can underwrite in real time the risk that you're taking on that one specific transaction. So it's about positioning the product at the right point in time, but also allowing the customer to just buy the piece of insurance that's interesting to him. Instead of, the old way of selling credit insurance, which was, we're going to insure everything that you do in a year and with all of your customers, which did not always work well, especially in Asia, because business in Asia is very relationship driven. So we had lots of customers that were like, no. My 10 biggest customers, I know them, they may be cousins, I've dealt with them for 20 years. I don't want insurance on these guys. I trust them with my heart. I want insurance on those 4, let's say, customers. So now we're able to position that at the right point in time, offer them exactly the cover that they need, and make sure that the sale can be concluded digitally.
Great. And Caroline, are you seeing any response? What sort of feedback are you getting from your customers?
So in that case, we're usually dealing with the marketplaces rather than with the end customers.
Understood.
But the feedback that we get from the marketplaces is that it's a really nice addition to what they offer, because it allows them to start providing an ecosystem of services rather than just focusing on their proper marketplace offering. So positive response from the market, clearly.
Great. Manuel?
I guess from what we've seen, recently there is a lot more interest in kind of investigating, not necessarily digital products, because at the end of the day, the risk is the risk, and the product design is around it, but just how the product is actually experienced and embedded in the consumer experiences, both from a buy and sell perspective and from how people kind of consume the service. So as Caroline was mentioning, only insure certain aspects of their business or their risk or their experience. We're working with a number of organizations that are very interested in different patterns for usage-based insurance, where you say, you know what, I only need this particular extra coverage because I'm a trail runner and I want coverage that, you know, when I go trail running on the weekends, someone is going to cover my medical deductible. The risk is quite specific. It's quite small, but I'm going to be billed by the kilometer that I run or by the hours that I'm running. All of the products that are pre-built in these insurers are built by the month, by the year, by the quarter. And people are now trying to experiment to say, what does it take to really shift their organizations, the operation and the servicing so that they can offer those risks in a much smaller, much more relevant. So I think the fight around digital is really more around relevance in the product proposition, more than necessarily, you know, what's the difference between a digital life insurance and a life insurance? End of the day, guy's dead. So, you know, how do you define that at the core, right? And I think that's part of that's part of the challenge and also the opportunity, to be fair.
Absolutely. Ian, can you hear us now?
I can. Can
Wonderful.
you hear me?
Yes, we
Okay,
can hear
cool.
you as well.
All right, cool. Can you just replay the question just so I don't misanswer?
No worries. So essentially, we were looking at in terms of, I asked Caroline about the digital product, like, you know, what are some of the strategies we've seen as far as digital products that have worked really well to get customers to buy directly online, and you know, what have you seen? And then Caroline also shared her own company's experience on this and the feedback that they got from their customers. So
Cool. Yeah. So I think I think what I could speak to is kind of the concept that we leveraged in China with Didi, the taxi service.
Sure.
And how we've deployed that to our JV with Grab. And so what we've done is, it's along the lines of this kind of concept, similar to what you guys have already spoken to in terms of how should rethinking about how should life insurance really be purchased, consumed, and then really deployed as a protection. And I think most people historically have thought of life insurance or related critical insurance type of protections kind of as long-term type of commitment that requires a big purchase or a lot of thought process beforehand and all these type of things. But then for Grab, they were trying to figure out, and we were kind of co-creating around how do we think of drivers that should kind of responsibly protect themselves, protect their families effectively in this space, but then have really no clue in terms of like, how much should I buy? Why should I buy? These type of things. And so they kind of began a journey where they were along this kind of it's microinsurance fundamentally, but then it's an accumulator, right? So then once you kind of, so Grab, of course, on one side wants to incentivize their drivers, and then to drive more and drive well. And then on the other side, drivers, you know, not entirely clear why they need to get insurance, but then that said, Grab offered essentially what I guess some might call a group insurance, where they kind of gave away a micro insurance of CI based on how much you've driven and the quality of your driving. And so then once you're a consistent driver, because obviously these guys are contracted people, they may not drive consistently and so on. So then once you kind of figure out that like, oh, okay, so if you drive enough and you drive for every drive, we'll give you 360 days of cover of this amount. And then you can accumulate, if you drive enough over a year, over a month, or whatever it may be, you'll be covered, you know, a substantial amount, like six-figure of Singapore dollar types of sum insured. And it can be more if you top up, you can cover like family members and extend that and that sort of thing. So this kind of like, you approach this as, I'm a customer, I have no idea anything about critical illness or even life insurance or accident, but then I drive. It's like they tell you, oh, you got some free insurance. And then the more you drive, you get more. And then, hey, by the way, you can top up and ride along in terms of adding coverage on top of that. And then this kind of like eases users into understanding, oh, this is what life insurance is supposed to be, or this is what long-term insurance should look and feel like. And so I think this is kind of a bit of this, like, how do I lower that friction to entry, and how do I kind of simplify what that kind of sales experience looks like, or understanding in education? And so I think that's been rather kind of an interesting experience for us to kind of make that successful in Singapore and kind of related extended to Malaysia.
Great. Thanks for sharing, Ian. So just to build on that, and correct me if I'm wrong, a lot of the success of that product that you're offering, Ian, would depend on how well your company is also leveraging data. And insurance is obviously one of the original data industries. That was how the industry was built. So
Yeah.
I mean, so far we've not seen a lot of companies doing well in terms of how they use data to benefit the customer, but do you see that changing? And also, could you give some, maybe if it's possible, an example of how your company is leveraging data to help the customer?
Um, so a lot of the examples that we have in terms of leveraging data are just kind of these automated underwriting type of like third-party data feeds that kind of inform risk models.
Yes.
And so then something really simple like our original Taobao product, the very fundamental issue was just that so we try to leverage these type of like what we call embedded scenario ecosystem type of products. They're meant to kind of help shift like consumer behavior in that platform. So Taobao back in the day, like this is now like the Amazon of China, is back in the day when you think about 6-7 years ago now, people, if you were to think of Chinese people buying online, it was like kind of, wow, I don't understand. This is like the early days of e-commerce. And then to think that if I'm buying from a merchant that's this like small manufacturer out in China in the middle of nowhere, like in a world where, you think about cheap copied goods in an environment like that, like no one's going to buy online. Like, what am I buying at the end of the day? And so then this very simple idea of like, how do I create this return shipping concept? And then Taobao was like unsure of how to rate that risk. Like, what does that mean? How do I do that? How that's an insurance question actually at the end of the day. And so that's really the founding of ZhongAn, is this 3 heads came together, someone that knew insurance, Ping An, someone that knew technology, Tencent, and then someone that owned the platform, Alibaba. And we came together to make ZhongAn. And how do we underwrite this, right? And that's like basket size, like huge loads of data on basket size, types of classes of products that have higher frequency of returns than others, and all that evolves over time. And then that becomes this big, very efficient, very high volume type of insurance issuance. Then you kind of fast forward, you take similar models with like travel, with the other types of like e-commerce returns, or the protection in terms of damaged goods or delivery delay and all these things. Like all that stuff is just really simplifying that. We've just recently turned it towards health in our China business. And then that's not so different than I think what a lot of health insurers today are looking at, kind of steps and kind of wellness and these type of like, how are they engaging ecosystems and different types of other data sources to kind of indicate they're healthier. Yeah, we're employing some models, some simple models, and then we're trying to study more complex models around that type of stuff.
Caroline, Manuel, would you like to add anything?
Yeah, I would question the idea that not much has happened when it comes to data in the insurance industry. I think that there has been a lot happening in terms of reviewing the risk underwriting and the commercial underwriting. I just think that it's not really that visible to the end users. But for me, this is something really important, because if you think of it, right now, insurance is probably insuring just a small number of the risks that actually exist, because there is still that big chunk of risks that we don't know how to assess. And if you think of the fact that insurance also has, and I strongly believe that it has a social role to play, because some types of insurance are actually helping people sleep better at night and plan for the future, etc. If you look at that, there is a number of health risks in the past that we could not underwrite, just because we didn't have the data for that. So if I take the example of the French market, which, as you can tell by my accent, I know quite well. If you have had like serious health issues in the past in France, by law, the insurer has to give you a health insurance. But the only way that you get that is if you leverage the French law for that, because let's say if you've had a cancer, no one would want to sell you health insurance, right? And the reason for that is because everyone is like petrified by that really large risk that we don't know how to underwrite. Now, if tomorrow we have access, today, if we have access to more data, better risk models, and we actually can underwrite that. So, from a business perspective, it's really good, because it means that there's a lot more, there's many more risks that we can underwrite. From a people perspective, this is also extremely positive, because I mean, we will really deliver on the role that we're meant to play.
Great.
I'll just
Thanks,
raise my
Caroline.
hand and just say that we can sell insurance to people that get to.
Amazing.
But then,
Okay.
there are certain underwriting conditions, of course. But yeah, I completely subscribe to that kind of social responsibility. There is a bit of this kind of, so of course we have the basic, like, can we just provide practical protection, life at an affordable price that should be there, that helps society in terms of financial protection broadly. And when people talk about protection gap, they're usually just talking about basic life insurance. But yeah, I completely agree. We try to do a lot of substandard. I have to give a lot of credit to our chief underwriter, who's been trying to really challenge and then been really challenging our own rules engine team in terms of developing the right calculations to kind of risk score somewhat to underwrite them. But yeah, I think I completely subscribe to this. It's the bigger problem that we face, right? Because we're the newest players is scale, right? And then what happens naturally, because insurance and actuarial things, you have to go fall back on a reinsurer, and then the reinsurer is not buying into it. So then it's like, wow, okay, let's kind of run through the models. I mean, you guys are supposed to have the data actually, and then explain to us, but come on, can we work something out? And so this is really just like we have to take on some risks, and we have to kind of control that through the number of policies we issue. And also what's unattractive, the natural market unattractiveness about that is just, it may not be a large market, right? And then, or at least not substantial enough for the first market movers, or first like new market entrants like us to kind of like pursue as a first bucket of risks.
Manuel?
I think the data question is really interesting. I mean, I definitely agree with Caroline that a lot of work is consistently being done around refining data sets and refining the risk models. Obviously, the reinsurers, that's their business. They have massive amount of resources that they see there. I look at it actually as a challenge more from a practical perspective on how that gets operationalized. And it's the fact that there is a significant lag between the data point being generated and it arriving in the hands of an actuary, a data scientist, or someone who's going to be able to employ that data point to adjust the product, the service, the pricing, the underwriting rule, whatever it needs to be able to expand the accessibility of that product and service to the market. So one of the key challenges that we continue to have seen, and in fact are actively talking to our clients about, is the fact that they're petrified. The pricing actuaries are petrified about putting certain products in market because they don't have that experience, or they're afraid that their assumptions are going to be off, and that by the time they find out about it, they now have 6 months or a year of this product in market, exposing them to risk thresholds that they're not comfortable with. If you're able to now close that real time, and you can say, hey, you thought your target was going to be 25-year-old marathon runners, but it turns out that it's 55-year-old cigar smoking martini drinkers. Oops. And if it takes you a year to figure that out, it's a challenge. So the way that people are now having to deal with the data pipelines and close the gap between generation of a data point, whether it's external third party or within the internal insurer ecosystem, and time to value of that data point to actually get it into the hands of the model, and then be able to reflect that back into the product and service or the underwriting rule in a meaningful way, that's really the gap that needs focus. After that, the rest is just people being good at their job and understanding that we have a social responsibility to drive societies forward. And that's the whole reason for insurance in the first place, right?
No, absolutely. I think we can all agree. I think a lot of progress has been made. There's still a lot of potential. And it's, discussions like these that put things on the table that maybe people are thinking about, but they've not actually articulated in the right way. But thank you so much. We are actually out of time. Caroline, Ian, and Manuel, thank you so much for lending your time today and being generous with your time. It's been, very insightful. I think all of us have learned a lot, and thanks to the audience for your questions and also for participating. We have these talks on a monthly basis, so follow us on social media. We'll definitely update with our next topic of our next Tech Talk. And yes, again, thanks for your contribution and joining us today. Have a wonderful evening ahead.